What is happening, people? It is your boy Jack, and today we are coming back at you with another video. Today we're going to be speaking about Carnival Cruise Corporation, ticker symbol CCL. This is going to be a very exciting one because this is a crazy stock right now. I actually initially found out about this company. They weren't on my radar until I saw this video by Financial Education where he decided to buy $100,000 worth of them. And it hasn't gone the best for him just yet. But today I'm going to be giving you my personal thoughts and opinions on this particular stock, on the cruise line industry as a whole. If I think Carnival is going to soar to new heights, or if I think that they're going to go bankrupt ultimately. That's what we're going to be discussing today. But before we get into the exciting juiciness that is the CCL stock right now, I'm going to ask you to please smash a like on the video, subscribe and hit the bell button if you're new around here. We are so close to that juicy 1,000 subs. I can taste it, man. I can taste it. Help your boy out. And drop me a comment with your thoughts on CCL. But without further ado, let's get straight into it, baby. So yesterday I made a video like this on Delta Airlines, and the first thing we spoke about was whether the industry is cyclical or not. So that's exactly what we're going to do for cruise lines. We can see here, the industry is highly cyclical in nature. And that is evident to see why people aren't going to be going out on cruise ships if they don't have a lot of money. If the economy is not doing well, people aren't going to spend thousands and thousands going on cruises. Why would they? They need their money. So when the economy is doing well and people have extra money, that's when they're going to be going on these leisurely trips. They're going to be going on their cruises, spending lots of money that they don't have to. But when the economy is doing poorly and people have to watch their spending, obviously it's going to suffer. So that's something to have in the back of our heads at all time when we're thinking about Carnival or any other cruise stock for that matter, is that in times like these, unprecedented times where the economy is doing absolutely horribly and people are worried about their money, they are going to take a massive hit. For one, they physically aren't allowed to do their cruises, and two, even if they could and even when they can again, their numbers will be lower than before just because people won't have all that extra money lying around. So let's just make sure we keep that in mind from start to finish. Now we're going to have a look into cruise line growth as a whole. Okay, so over the last decade, since 2009, cruise ship passengers have grown from 17.8 million to 30 million, an annual growth rate of 5.4%. So it is growing very, very quickly at 5.4% average growth rate every single year for the last decade. And more significantly, good for us investors is that the cruise industry's revenues have grown even faster, from approximately 15.7 billion to an estimated 31.5 billion, a compound rate of growth of 7.2%. So when things are doing well, this industry is doing well. And keep in mind, this is from 2009, so this is just when we were getting out of our last financial crisis. So once we got out, we can see that the growth was pretty immediate. It started happening very quickly. So this initially is a sign that if we believe that CCL will not go bankrupt, if they'll find a way to survive through these tough times, then they will ultimately do very well on the other side. But the biggest question is will they survive this? Like, will they have enough money to get through, or will they just completely go bankrupt and will your stock be worth absolutely zero? Will you load? Why won't you load? Are you joking, man? An entire day has passed and it's still not loaded. Well, absolutely nothing wants to load. But if we just go off the past numbers, we can expect to see some nice growth in the cruise line industry going forwards. In the short term, obviously we don't. Cruises aren't running. Less cruises are running because of the virus that's going around. It's evident to see why these companies will be hit massively in the short term. But in the long term, the outlook hasn't changed. People are going to be making more money, people are going to be spending more money, and there's going to be loads of cruises, there's going to be loads of cruise ships bought. We'll talk about that a little bit later because Carnival is actually in the process of buying more cruise ships, which is a scary thing, but we're going to get into that. But basically, it's gonna grow, baby. Now I want to show you just how volatile cruise stocks have been the last week, 2 weeks, whatever it is. We're going to start off actually on Royal Caribbean just to give us a reference point, something to compare to, just so that we can see it's not just Carnival going through these crazy trends. So we're just looking at a 5-day chart. Plus 18.5%, plus 22%, plus 23%, down 4%, down 15%. It's been mental. And just look at this green number. Even after these 2 bad days, it's up 44.9% from its 5-day low. Let's just go to the 1 month chart. Keep in mind, we're up pretty much 45%. Boom, it's still down nearly 60%. That's how crazy these markets are right now. It's crazy. So this is Royal Caribbean. Now we're going to actually have a look at Carnival, the one we're all here for. So now again, we're looking at the 5-day chart, and again, things are crazy. We see no change, we see 3 nice days, and we see 1 bad day with a total 5-day change of up 20%. But again, let's just go have a look at the 1 month chart. Boom, load up for me, baby. Minus 56% still. And again, if we'll just have a look at the 3 month chart just to see overall, minus nearly 72%. These are crazy numbers, considering during the Great Recession it did not even fall that far, and we'll get into that a little bit later. So they've obviously been hit extremely hard because of this virus. It's no question as to why they've gone down that much. We all know exactly why. And something that is really important to know, This is not a US company. Their headquarters is in the US, but they are a UK based company. So if you're up to date with the news, you'll know that Trump wants to bail out airlines and cruise ships, which is fantastic. But that does not apply to Carnival because they're not a US company. They don't pay them as much as a US company would. And the UK have not come out the same way that Trump has said and said that they're going to bail out their airlines and cruise lines and everything along those lines. So what does that mean for Carnival? Well, right now, let's just have a quick look at their debt. So in the year 2020, 1.83 billion debt, 2021, 1.92 billion, 2022, 1.35 billion, the whole way down until a total after 2024 essentially, they're looking at 11.63 billion in debt. Now, how are they going to pay this? So we just briefly touched on the point of a bailout and how it looks unlikely, but basically look, the number of industries that may need to be bailed out in some form by the government gets longer by the day. Investors shouldn't expect the bailout of cruise lines. One big reason, okay, is that they aren't an essential activity, but the other one I just touched on is that they aren't US companies. Carnival is incorporated in Panama and pays very little US taxes. Workers also come from all around the world, making a bailout very difficult to justify for any specific government. They don't need to bail out this company because it's not bringing the US lots and lots of money. A lot of their workers aren't even from the US. It would make no sense to bail out a company like this from the US's point of view. Right now, a quick look at 2020. Their cash 518 million. Their credit drawdown 2.8 billion, new ship commitments. So they've already committed late last year, late November, they committed to new ships of 4.8 billion, new ship liquidity 2.8 billion, and 2020 debt maturities of 1.83 billion, leaving them at a total of negative $500 million. The way I'm looking at it right now is it's going to be very hard for Carnival to get through this, but they may well do. And if they do, my days, is this going to be an incredible investment. The best way I see that they're going to possibly get through this is to get more debt off of their new ships to get them through the tough times so that when they are then making money back, they'll be able to pay off that debt. But nobody likes having to get more debt in a company that already looks scary and can't pay off the debt it already has. It's borrowing money off one fella to pay it to another fella. And then you still have to pay this fella back later down the line. And then when does it end? You just keep borrowing and spending, borrowing and spending. It does not last forever. The other thing that may happen, which in my opinion would be a better option, if they can find a way to delay the payments on these new ships that they currently have coming in, that would make the cash sheet look a whole lot better and would actually give them a chance at surviving. They wouldn't have to take any new debt, and they're not going to need those new cruise ships because there's not as many people going on cruises. So if they can come to some sort of an agreement with whoever was giving them those cruise ships, that would be their best bet in my opinion. And that will be in the interest of the new cruise ship providers. Like, they are going to want their long-term business. They're going to want them to keep going so they can buy more ships down the line. So we'll have to see how that plays out. Now we're back on Simply Safe dividends. We're just going to have a quick look at their dividend safety score and their dividend yield. So they have a current dividend safety of 35. It was downgraded on March 10th, obviously because of the virus. And they have a current dividend yield of 13.88%. which is massive. I'm sure all of you appreciate how massive of a dividend yield that is, but that is largely due to the fact that their stock has plummeted. Now, is this dividend safe? It's most certainly not. I'd be absolutely amazed if they can keep paying any sort of respectable dividend given how much debt they're in. We're going to have to wait and see, but just look at this. Unless operating cash flow experiences a significant increase from the 5.5 billion base, Carnival's free cash flow still won't cover its $1.4 billion dividend. They don't have enough money to pay their investors. They barely have enough money to potentially survive. And again, we can see that when times got tough back during the Great Recession, boom, there was no dividend paid. But what we can also see is that when they did get through that, the dividend growth was excellent. It grew very quickly, it staggered for a while, and then lately again, the dividend growth's been absolutely fantastic. So if they do survive, there is potential for an absolutely fantastic dividend down the line if they do start to do really well. Now, I do think it'll actually be a good thing if they do cut their dividend. They'll have a lot more money to get through this tough time. Over the past year, they paid out 45% of its earning as a dividend, which is towards the high side for hotels and cruise liners. It leaves less money to pay the dividend if things get tough, and now things are tough. They will not be able to pay that dividend. They will not be able to sustain that dividend. Right now, their debt levels appear to be reasonable, but if the company falls on very hard times, the dividend could be on the chopping block, which is exactly what's happened right now. That's what we expect to happen. They've only paid uninterrupted dividends for 9 years, which is not a very long time whatsoever. They've generated positive free cash flow in each of the last 10 years, but again, that's not surprising because each of the last 10 years came right after the Great Depression, came during the boom when people had money to go spend it on things like cruises. So upon initial inspection, obviously that's a good thing, but it doesn't give us any information on what's going to happen going forward because it's a completely different time. Now let's just have a look at this. Their sales were down 9.9% during the Great Recession, okay? Their stock returned a loss of minus 65% during the Great Recession. Now this happened during the Great Recession. what is going to happen now when people don't have money and people can't go on cruises? They can't physically go on them. What is going to happen now? How much are their sales going to be down? They're going to be down an awful lot more than close to 10%. Let me tell you that much. It doesn't take a genius to figure that out. And if this is all it took to see a 65% drop in their stock, how much lower can it potentially go? That's my biggest question, and that is what I find so scary about Carnival, and that's why I don't have a position in them just yet. We just want to have a look at one more thing here that shows us that essentially the dividend will ultimately get cut. Their net debt to EBITDA. If you don't know what that means, it's their earnings before interest, taxes, depreciation and amortization. So we can see they've actually been doing really well here up until now. Their projected next 12 months is currently sitting at 5.92. This indicates how many years of EBITDA a company would need to pay off all its debt net of cash in hand. If leverage rises too high, a company might cut its dividend to free up cash flow for debt reduction. So obviously that is what we are expecting to happen right now. So if one of the big reasons you want to invest in this company is because of its really attractive dividend, forget about it. It is going to get cut somehow. If they'll pay a smaller dividend or if they'll pay no dividend at all, nobody knows just yet. My guess is honestly that they will completely cut the dividend. So what do I make of all of this information? Because there's an awful lot there, some good, some bad, some promising, some scary. What I think it boils down to is if they get through this, if they figure out a way to get through this, I think they will do incredibly well in the future. I think they're one of these companies that could jump 50 to 100% within a year or within 2 years. I think they have one of the biggest growth potentials out there, but you could lose everything just as easily. If your portfolio is on the edge of the safer side, if you're a really safe investor, I would definitely not even consider getting into these. And again, let's just get it out there. I'm not a financial advisor. These are just my thoughts, the way I think of things. But if you like safer stocks, this definitely is not one for you. Now, if you're a little bit riskier, or if you like dedicating a certain percentage of your portfolio to high risk, high reward stocks, I think this is an amazing pick. I'm still really on the fence. I really do want to own this company. I've been watching it since it was trading above $40. It reached as low as I think $7.5, $8. I didn't get in because I'm so uncertain where the market's going to go. If I start to see any news come out that shows that this company will go back up, I will be investing. I'm not worried about missing out. I'm not worried about getting in at the very bottom, and I'm not worried about getting in too high. Because the thing is, no, even if this stock jumps 50% in a day because some amazing news comes out that shows that they're 100% definitely not going bankrupt, they're still going to be at a really cheap price. Obviously, yes, you're going to miss out on 50%, but you didn't have to take the risk of losing 100%. So that is where I stand with Carnival. I do really want the position, but I just need to see something. I need to see something concrete that they're not going to completely and utterly go under. So guys, I really do hope you enjoyed that video. If you did, let me know your thoughts down below, please, because this is one that I think everybody has strong opinions on. So let me know where your headspace is at with Carnival. Drop the video a like if you haven't, and again, please subscribe to the channel if you haven't just yet. We're so close to that 1,000 subs mark. But anyway guys, until the next one, peace.